Hello guys and welcome back to the Cedi Investor. In today's episode, we are taking a trip, go get your passport. Charlie, meet me for Kotoka International Airport because we are moving off YouTube and we are going onto TikTok, Ghana TikTok. This is a platform I've really used. I don't really use this platform, but I decided let's hop on it today because if you know me personally, I love to talk about investing, finance, money, business. All these things are things that really excites me. I'm happy to talk about these things. So I've heard that Ghana TikTok is one place you are able to get all of these advices from. So I just want to hop on there, see what people are saying. I'm willing to listen to them and I'll give my comments and thoughts on it. So we have a lot to unpack today. Let's get into it. Now before we start this particular video, make sure to like the video, subscribe and also share. I will really appreciate it. Also, I just want to give a quick disclaimer that I don't know any of these people. The TikTok algorithm just recommended them to me on my For You page, so I just decided to just react to them. So these are no people I'm recommending in any way. I would always say that you should be very careful when you are taking advice from the social media space, including myself, because there's a lot of false information out there. So one thing that I would say is that Charlie, just double check, do your research, and unless it's a professional, an actual professional, where they see the certificates and everything, please Charlie, be guided when you are taking information from them. And like I said, including myself as well, I'm not excluded from this as well, so just be guided out there. Let's get into this video.
If I had GHC 1000 right now, these are the Ghana stocks I'd buy. And why? Let's build wealth from Ghana for Ghana. 1. MTN. Ghana is a must. Everyone's using MTN Momo. It dominates telecom with strong profits and great dividends. 2.
Okay, before we continue, let's start with MTN. He says it's a dominant company. I agree with that. It dominates the mobile money sector. That's fine. I think this is a short video, so there's not really a lot of explanations as to the reasons he's giving, but all in all, good. I like the first recommendation. Let's continue.
CalBank is still growing post DDEP. It has solid fundamentals and is currently undervalued.
I think one thing I would want is more emphasis or explanation for the reasoning. I get it's a TikTok video, so there's not really a lot to say, but
Dominates telecom with strong profits and great dividends.
Let me just go back
2.
to
CalBank is still growing post DDEP. It has solid fundamentals.
The main reason I wanted more explanation is I don't really get where this is coming from. I don't know where this person did their research, but I definitely can tell you that CalBank is not going post DDEP. The company is not making profits. This year they did not make profits. You see, sometimes when you are reading the statements, they can use accounting terms to cover your eyes. When we look at the statements of CalBank, we can see right here revenue. This for their Q2 statements, right? They made 199 less compared to last year. Net fees and commission, they made 95 less compared to last year. Revenue 364 less compared to last year. Operating income 383 less compared to last year. You can see that their net profits before tax 287 is more than last year. But let's take a deeper look into this. We can see it's mainly because of what net impairment gain on financial instruments. So this is basically a provision that the banks make. They set money aside that in case of any losses, that money that is set aside would cover or take care of the losses. But let's say maybe that losses it didn't really happen as much as they expected. They can bring that money back. So let's say they expected to lose 2 million, so they set aside 2 million, but when the results came they actually lost only 1 million. So out of the 2 million they set aside, they can bring 1 million back and add it to their next statement and say, oh, okay, we're expecting to lose 2, but we just lost 1 pair. So we have one extra 1 million there that we can bring to add to our statements. And that's what they did to show profits compared to last year. It's not like the business in itself is doing well in terms of the business is growing. The business, you can see from the key metrics, net interest income did not do well compared to last year. They are actually making less compared to last year. Net fees and commission less compared to last year. Revenue less compared to last year. So I don't see that as growing post ZDP. Even looking at their fundamentals, your man is saying they have strong fundamentals. And that to me again is a big lie, because Cowbank's NPL worse. That company, Charlie, the NPL, it go fit shake you. Have almost 50+% though. Their CAR, that's the capital adequacy ratio, not good as well. And you guys know me, I always like to use the data. I want to show you so you guys can believe me. Non-performing loan ratio 51.6% in 2025. That's current year to date 2025 compared to 36. So that means more people are defaulting. Either they increase their loan size and people are still not paying, or they kept the loan size. I don't want to go through the data. It was relatively the same and still more people are defaulting. Capital adequacy ratio -7.6, meaning the company is not financially sound. The company is not financially sound. Look at all these other key metrics, negatives. One thing I always like to show, and is that why you have to always read the statement, because oh my goodness, because if you don't read the statements fully, these companies, they are very smart. There's a lot of things they can put into the report that will just pass your eye top, right? Look at this. Is it a letter from Bank of Ghana to us indicated that the penalties associated with the breaches in CAR, SOL, and aggregate forex open position will be computed and deferred until the bank makes profit and its financial soundness indicator are within the regulatory limits. But if you go through the report, we can see right here there's profit of 174. So what profit are they talking about? You said it will be deferred until they make profit, but I'm seeing 174. So what is this? Is this not profit? So Charlie, I always tell people that the statement there, they are very important, because there's a lot of information that if you don't read it, it will just pass your eye top. And I know you guys can see how gingered I am, and that's because of Cowbank, this company there. A special relationship that I have with them. Let's continue.
And is currently undervalued.
So even in terms of the undervaluation, there's 2 types of undervaluation. The company can be undervalued because investors are not seeing, are not matching the true worth of the company with the share price. So a company can be performing well, but maybe because of some reason investors are not seeing it, so you are just not pricing that into the stock. So that is when the undervaluation of a company becomes a buying opportunity. But we also have a form of undervaluation where investors are aware of it, but we know that the company, there's uncertainty. We don't believe in the company, or there's some issues with the company. So investors are pricing that into the stock as well. So I think that's 2 forms of undervaluation that I can talk about.
3. Total Energies. Ghana is a great pick. Fuel demand isn't slowing, and they offer strong dividend yields.
I don't know why people always say this. When I was doing my stock recommendation video, part 2 is on the way, guys, so just wait for that. But I don't get it. Looking right here at Total's dividend yield, it is 7.94%. Now, maybe I'm mistaken, or I don't really understand finance. The payout ratio right now is even 104%. So they are even paying out way more than they actually have, which is bad in its own, but you let's forget about that. I want to see payout ratio between 60 to 80%. I think that's a good range. 104 there, my brother, is too much. But that's not what I'm even talking about. The dividend yield, 7.94%. For context sake, let's take a look at Treasury bill. Treasury bill is an investment where the likelihood of you getting your money back is higher compared to something like stocks like Total. So we normally call treasury bills low risk investments or close to risk free investments, and something like Total is a high risk investment. The likelihood of you losing your money is higher in something like stocks compared to treasury bills. Now, in a high risk investment, they are giving you 7.94%, but stocks as of now is between 10 to 12%, depending on if you buy the 3 months or the 1 year. It is 10 to 12%. That's what you'll be getting. So, if for something that you will consider low risk, I'm getting 10 to 12%. There's something that if I put my money in, the likelihood is I'll get my money back. I'm getting 12%. Why would I go for an investment where the chances are I won't get my money back? You're giving me 7.9%. Now, yes, we all know about capital appreciation, other forms of maybe it's a good business, but I'm saying you can't say that investors appreciate the 7.94 because this is not a good dividend yield. By all means, 7.9 should not be a good dividend yield when something that you would consider as low risk is 10 to 12%.
4. Fan milk Lucidid is a favorite. Youth brand loyalty and post-COVID recovery mean growth potential.
I think one thing that I would say is when it comes to farm milk, yeah, I think they've done very well, especially post-COVID. I think their board, especially managing director Lionel Perrin, one of my favorite guys right now, I think they've done a massive job trying to make the company more profitable, more cost efficient. I think they've done a great job. But one thing I would say with farm milk, and I think that's why it makes it the most risky investment in my Cedi farm portfolio, is that there's a lot of competition when it comes to the consumption space or the consumable space. It's very easy for a consumer to just go up and say, oh, I'll drink Calipo instead of something like farm milk. So farm milk have done very well. They've done a lot of brand marketing and whatever, but then there's a lot of competition in that space. Very, very, very competitive. So I would say that's what makes it very risky in terms of the types of business that I like to invest in terms of the high growth compounders. Well, I think they've done well.
Everyone loves Fan Ice. 5. Enterprise Group is solid with its insurance and pension business. Diversification protects your investment.
I think when it comes to the insurance space, one thing that I would say is I've always been bullish about the insurance space. I think that's one sector that investors will do well if they invest in over the next 5 to 10 to 20 year period. We know the penetration rate is very, very low, but as that continues to change, as the insurance culture in Ghana continues to change, I think investors are going to do well, especially in Enterprise Group. I believe they are well positioned in the insurance space to benefit, but like Farmuk as well, they are facing some sort of competition, especially from SIC. So we would want to see how that also plays out. So I think that's okay. Let's go to the next one.
Don't invest in shares with a treasurable mindset. What do I mean by that? Treasury bills have defined returns, clear defined returns. Shares do not work that way. Shares is based on how much you bought it and the price now. That determines the profit or margin that you have made. So don't go and buy shares and be expecting some 10%, 15%. It doesn't work that way. So guys, that's very important. Let's keep that in mind.
Yeah, so I think I do share his sentiment to a point. I do agree with that in terms of not going to shares thinking you're going to make 20%, 50% with that kind of mindset. Because first of all, when it comes to stocks, I always say it's a long-term investment. If you are doing it for the short term, Charlie, yeah, in the short term you can make 50%, but you can also lose everything. So and I think one thing that really helps in trying to just reduce that risk is understanding your business. So like actually knowing what your business does. Because just imagine, let me use MTN. You don't know what MTN does. You don't know how the company makes money. You don't know what the company does, anything about the company. If the share price drops massively, Charlie, you can get a heart attack or something like that. So, understanding that business and knowing why you invested in that business, I think will really help you because should the share prices drop for no particular reason, and you check the fundamentals and everything is great, it just gives you an opportunity to buy more at that cheap price. I don't know if you get one. So I think buying high quality companies that are growing or compounding very fast, you know, it's like a minimizer for the risks when it comes to investing into companies. Now, I also want to address another point in the video where he's saying treasury bill mindset and treasury bills comes with some sort of fixed return. I get what he's trying to say, but I think one thing I've realized in Ghana is there's nothing like risk-free investment. There is something called close to risk-free or low risk investment. But even if you would consider something risk-free, it was supposed to be bonds, not treasury bills, bonds. But one thing government has showed us, see, if government fucks up and because they go into any issues, they are willing to do haircuts, they are willing to default, they are willing to make sure you, the domestic person or local individual, are going to suffer the consequences, not government. You get it? So and that was shown during the whole debt restructuring. If I believe if you invested into bonds, even into mutual funds where they did mark to market, you experience that the governments are willing to default and can't default. So yes, I think we should always go into investments with the mindset that investing is, there's some level of risk attached to investments. Yes, we are all investing to make return, but we shouldn't ignore the risks just looking at return. So you think, oh, you make 100%, so you ignore everything else. Just know at the back of your mind that there's always going to be risks associated with investments. So another key thing will also be diversification. That's why it's always good to diversify. So as much as I appreciate and love stock, it doesn't mean I'm going to invest into just one company. And it doesn't even mean I'm just going to invest into only stocks. I invest into treasury bills. I invest into mutual funds sometimes. I invest into the US market. I invest into Ghana's market as well. So diversification is very key. And spreading your capital across multiple investment vehicles, trying to grow all of them, I think is very key as well. And finally, we end off with I don't know who this is, but he's saying with just 50 Ghana cedis, you can start investing in stocks. Let's take a listen at what he has to say.
So some people think you need huge amount of money before you can start investing in stocks. But let me show you something. How much is this? 1, 2, 3. This is just 50 Ghana cedis. As of today, MTN shares is going for 3 cedi 30 pesos. What this means is that these 50 Ghana cedis can buy approximately 15 shares of MTN. Shares of Goil as of today is going for 1 cedi 77 pesos. What this means is that these 50 cedis can buy 28 shares of Goil. Car Bank share as of today is going for 0.65 pesos. This means with 50 cedis, I can get to buy 76 shares of Car Bank. Again, the shares of Anglo Gold Depository is going for 0.4 pesos as of today. What this means is that with just 50 cedis, I can get 121 shares of Anglo Gold Depository. So what am I trying to communicate with this message? All I want you to understand is that you don't need huge amount of money to start investing in stocks. With just 50 cedis, you can start. What is important is that you start small and keep adding up. So if, for instance, you're able to buy 15 shares of MTN with 50 Ghana cedis, the next day, in a week or a month, you get 20 cedis. You can use that 20 cedis to buy more shares and add it to MTN. So anytime you get money, you try and buy shares little by little. And before you know, you have a lot of shares in one company. So this is just by the way, but they say a word to a wise.
So I would say that when it comes to this whole giving advice, I just prefer when you give reasons to why they should invest into stocks in particular, because I think people do take stock investing at like the lighter side. I always want people to invest, especially into stocks. I think it's one avenue that people would make a lot of money if they do it right. But there's a lot of risks when it comes to stock investing. So I don't really appreciate it when people just say, "Oh, invest in this, into that," without really just giving some reasons. I understand that at the end of the day, it's a TikTok video, so probably you can't make it that long to give the reasons. But let me say, looking at the 50 Ghana cedis, there is some of he makes some points that I agree with and some that I don't. So let me probably start with the ones I do agree with. Looking at the 50 Ghana cedis, I think, yeah, one thing I always say is, regardless of what amount of money you have, always investing is very, very good. And I think the reason why that is very important is because of the habit of investing. If you are investing when you have small amount of money on hand, so in this case, the 50 Ghana cedis, let's say you have 50 Ghana cedis and you are investing, it builds you up, it builds that habit of investing. So the likelihood is that if you start making huge sums of money or bigger money, you are still going to invest. I think one excuse that a lot of people make is that, "Oh, I don't have money right now, so I'll wait till I start making money, and that's when I'll start investing." What's the guarantee? If you're not investing when you have 50 Ghana cedis, what's the guarantee that you're going to invest when you have 5,000 or 10,000 or 50,000 Ghana cedis? Because there's always going to be expenses. There's always going to be something you can use the money for. So I think when it comes to that, probably that's what I'll agree with, building that habit of investing. But one thing that I would add to it is that I think our main focus should be growing our income. Because let me just use myself for an example. I think I got serious about investing at the latter stage in SHS, beginning stage of university. I think my final year in SHS and to level 100 of university, that's when I really took investing seriously. And since then, I've been investing here and there, investing here and there. But it was until I got employed, started making earned income, that's when my investing actually became very, very serious, because I started earning money that I could set aside each month to invest. In school, I was getting money here and there, but I was not really there's not really a lot I was doing. I would say it just built a habit, and I was able to learn a lot. But then it was until I got employed and started working, and that is what I was able to use to start my investment journey, to actually build something. So I think our main focus should be on growing our earned income. So through salary, through side hustle, through business income, whatever way you can use to make money, any extra cash that you can invest, I think that should be your focus. Because at the end of the day, investing is used to grow your wealth, but you need a wealth to grow for investing to work. Investing only works when you're actually putting money into it for that money to compound. So if it is going to school to improve your experience or your skills to increase your income, I think that's one way you can do it. If it's learning a side gig or doing a side hustle or starting a business, or any way to improve your income so that you can have more to invest, I think that is one way that we can go about it. And finally, in terms of the stocks he recommended, I think at the end of the day, as much as stock investing is very, very good, I wouldn't say it's for everybody. Not everyone has that energy or time to research a company. That's why there's various alternatives. We have mutual funds, we have fixed income like bonds, fixed deposits, treasury bills, a lot of investment options, that wouldn't necessarily require you actually putting that research into understand the whole company and make up of a business. So one thing I would say is that just research ahead of time. Don't just go and buy because someone is saying go and buy, because at the end of the day, if you don't really understand the reason why you're buying, if the price goes down, yeah, Charlie, it will be wahala for you. I think this year and last year has been quite a bullish year for the Ghana stock market. So like I said in some previous video, this year, regardless of whatever stock you bought, most likely you would make money, and it has made a lot of people, bullish towards the Ghana stock market. But remember, stocks don't go one direction forever. Sometimes they come down as well. So as much as we get excited about it, and we try to invest as well, we have to understand our company. So during the period that those prices are coming down, we don't just take rash decisions, but we actually relax to see how the company is performing. So I think this is where I'll end it. I really enjoyed this particular video. I think we'll be taking more trips, leaving YouTube once in a while, coming on to TikTok. So Edua, your passports, make sure see Charlie it did there, because I really liked this video style. I think I'll be doing way more of this. That's if you guys do enjoy it as well. Comment down below your thoughts on everything I talked about on the videos as well. I really love to know, do you agree with me, do you agree with them, what are your thoughts? Make sure to like, subscribe, share the video. I really appreciate it. Thank you so much. Until we meet again, have a wonderful and blessed rest of your day. Peace.